Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 11th of September. I'm Daniel Lam, your host for the podcast. Over the weekend, I had a very uneven speed chess tournament where I played with much self-doubt. Of course, as the time control suggests, reflecting excessively with limited thinking time was not the best of mix. Therefore, in some ways, I was lucky to be settling for the silver. Now, that's a great expression to start this podcast because silver has been known as a poor person's gold. Now, silver is cheaper priced and seen as a higher beta version of gold because the two metals share many macro drivers. So, for example, both benefit from a weak US dollar, which has been a key contributing factor, leading to silver being up more than 40% year to date and breaking above the $40 per ounce level for the first time since 2011. Now, supply deficit and tight inventories are also important in leading silver higher. Forecast shows that we are going to witness deep undersupply for silver for the fifth consecutive year this year. Now, there are other factors at play, such as the ongoing tariff uncertainties. We're hearing noises from Trump again. He's pressing the EU to impose more tariff on India and China in order to pressurize Russia to come to the negotiation table regarding Ukraine. Now, whether that impacts silver directly or indirectly, the market has been consistently pricing in elevated tariff risk relative to the other precious metals. So we're looking at EFP, which stands for Exchange of Futures for Physicals. That is a private OTC transaction where a party swaps a futures contract for the actual underlying physical commodity. Silver's activities on EFP have been consistently elevated throughout this year versus other precious metals. This had to do with metal security, where silver's classification as a critical mineral is currently under review. Now, silver's exchange-traded product flows have accelerated rapidly and are up 3,000 tons year to date. This is the fastest pace of inflow since 2020. However, retail is the dominant holder in silver ETP, and given possible concerns about the slowdown in industrial demand due to the weak non-farm payroll numbers, there could be short-term profit-taking before silver goes to test the $42 level. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.